Today I'm sitting down with Ben Boulter, the man behind TabTrade, a trader who decided to stop trading with brokers and start building one. His motto is a broker by traders for traders, and almost everything you think you know about picking a safe broker is incomplete. Ben walks me through what it actually takes day to day to launch and run a regulated broker, and TabTrade is regulated in Mauritius, not by the FCA or ASIC, and you will see why I am comfortable trading with this broker. And before I meet you with Ben, I have a favor to ask you. Please double check if you have subscribed, because our analytics show that most of you watching my videos miss to subscribe. They just pop up on the home screen of YouTube and you click and you watch them, but you've missed to subscribe. So thank you very much for double checking. It's a free one-time action and it means the world to us. So now let me meet you with Ben. Hey Ben, welcome to my podcast. It's a real pleasure to have you here.
Hey Petko, really great to see you. Thanks for having me on the show.
When you wrote me a couple of months ago about starting a new broker, I got really excited because it's something that probably I'll share for the first time on my YouTube channel. But you were the person who supported me the most when I was starting my YouTube journey. At this time, you were working for BlackBull, and BlackBull became a sponsor of my YouTube channel before I was driving any traffic, before I was having... I can't remember, maybe I was below 10,000 subscribers at this time, and you said, hey Petko, I like what you're doing, I'll just support you, we will sponsor your videos, I believe you will grow. And years later, I can say that it worked out well.
It's definitely serendipitous. Yes, your channel was new at the time, but you did have some great content and you were starting to form a good community, and I think that's very important. So definitely the type of content and education I support.
Thank you very much for that. I really appreciate it. I'm happy that years later, BlackBull is still on our side, still supporting us. We're growing together. And now when you said that you launched a new broker, I immediately wrote to you, sure, I will give it a try. I will test it. I will go for it because I know very well the person behind. So can you tell me your story before even BlackBull? I know you were at Pepperstone, so you have this experience with the very huge brokers. Can you tell us how it started?
Well, they weren't huge brokers when I started. So it's definitely been an interesting journey, taking those brokers from the ground up to where they are now. My journey started quite a lot earlier than that, though. About 25 years ago, I started trading on paper accounts. So I was just starting to learn about share trading, stock trading, capital markets, international business and commerce, and I was still in my teens. So I had quite a few years of trading under my belt when I applied for that job at Pepperstone, and was quite fortunate to take the position. It was actually really interesting timing because the Black Swan event had just happened and the markets were in turmoil and getting a lot of attention. And that was sort of the infancy of retail trading. Before that, it was all institutions, large institutions, and there were a few big players in the industry. But the true democratization of retail trading had really only just started. There were about a dozen of us at Pepperstone when I came on board, and we still had the original founders in the office. It was a very exciting time. We had a little studio on King Street, and everyone knew everyone very well. Within a couple of years, we had another license. We'd crossed over into the hundreds of employees, and the business was really taking off. We had a nice deal with Qantas. Our new client numbers and trading volumes were really, really healthy for how old the business was.
I remember Pepperstone was the first broker I ever traded. I'm not using them anymore, but I still believe they are huge and you have a big part of it. But before you tell me how you got into BlackBull, can you explain to the younger audience what is pepper trading? Because I'm sure they will not be familiar with it.
Well, it's just a demo account. I guess the terminology demo account is quite standard these days. But back then, when I began trading, it wasn't really referred to as a demo account. It was just called a paper account. So it was demo trading. I first learned to trade with a share trading competition using CMC. Mm-hmm. And I was on demo accounts for a few years, just learning the ropes. Still learning. It's a journey.
Which is the right way to start, because usually now people always jump into live trading immediately without having an idea what they're doing. And that's how they blow accounts in the first month, unfortunately.
100%. You can't understate the value of education and learning how the basic concepts of trading, and I would say more importantly, the psychology of trading. It has a big impact on the results. But we had a few great years at Pepperstone, and it was around that time, early 2018, I ran into one of the other founders at BlackBull at a conference, and we started talking about growing the business together. I came on board a few months later and sold my family home to finance an investment into the business. We had 5 of us, no licenses. We were fully unregulated. Thankfully, we had good banking relationships. So I think that was probably our strongest suit, and being based in New Zealand, which is generally considered a safe place to do business. And from there, we started putting the pieces together. So we established a strong foundation. We acquired 2 licenses over the next few years and put together a team. It was about 20, 30 of us within the first year. And we grew that up to just over 100 employees over the next 5 years, and multiple offices, a full proprietary trading system, bar the third-party execution platforms, and a brand name that still has a lot of credibility in the industry. It was a tremendous couple of years, and definitely reminiscent of my experience at Pepperstone. We went through that similar sort of growth trajectory. I was fortunate enough, we had several institutional investors show an interest in the business. And one of them was a private equity group in New Zealand. The other was our liquidity provider. My wife was pregnant and there was an opportunity to step back. So I put my hand up, and the timing was just perfect. We had a great valuation. The business was going well, and it just seemed like the right time. So I took a step back. We relocated to Australia and decided to spend a few years just enjoying life.
That's so nice. That's so nice of you. And all of that experience that you had growing Pepperstone, then growing BlackBull, at what moment you decided, I'm going to build a broker instead of being part of it, but having your own broker?
Yeah, I wouldn't say there was any one catalyst for that decision. There were a few things that happened over the past couple of years that helped me identify an opportunity in the market. With both of the brokers that I had helped to grow, what I had seen was a slowdown in operational efficiency, decision-making, and execution, while at the same time, the markets still continued. Consumer demands changed, and it was harder and harder to keep up. So I think that was one thing.
Is that because of when company grows? Because I've worked as well for huge brokers before starting algo trading space. And I've noticed this one thing, that when the company gets bigger and bigger, when there are more layers of management, let's say it in a simple way, a simple decision sometimes takes months, and execution is obviously a couple of more months. Well, for example, with us, with algo trading space, we're team of 10 people, and that's where I want to keep it, because really sometimes we decide something in the morning and it's ready by the evening. Is that what you mean, that big brokers slow down because they're just heavy of layers of management?
Yeah, exactly. And I think that's a really good analogy. It's unfortunately just the nature of the beast. As the business gets bigger, there are more layers and bureaucracy and red tape. This trend towards regulation in the industry as well, which is incredibly important. But as you add more and more licenses, then there's more sign-off required. There's more checks and balances. And all of these things, they cost more. They slow down the time to delivery for the business, and unfortunately have a negative impact on the user experience for clients. So I think with that in mind, and then the rapid development that we've seen in artificial technology over the past couple of years, with all the large language models that have been developed and the wonders that Claude Code can do, it's created an opportunity. And I think the whole industry has gone through phases of consolidation. And I think we're in one right now. I mean, if you've been following the news, you would have seen all these brokers that have an interest in selling, mergers and acquisitions going on, or brokers losing licenses or going bust. And it's no accident. I think this is just a part of the natural consolidation cycle that the industry goes through, and this time largely driven by those technological advancements. I think part of the industry, one of those pillars, is now the large incumbents that have nearly unlimited bankrolls to be able to finance anything that they want to do and to be able to weather the storm. There have been some pretty significant trading events this year, a huge shift towards gold trading in general, which is something that hasn't accounted for the significant portion of the balance sheet it currently accounts for of the turnover. And those large incumbent brokers are able to endure. On the other side of the industry, you've got new startups like TabTrade that are heavily leaning into the technological advancements for operational efficiencies, being able to move incredibly rapid with changing client demands, and being able to take new products to market at a pace that the rest of the brokers that are somewhere in the middle aren't able to compete at. So there's an opportunity for TabTrade with a slightly different approach. Of course, finding a foothold in the market is always a challenge, and we do have our ideal consumer profiles and our competitive advantage and value proposition with what we offer, but it's still hard. Starting a new broker in 2026 is definitely a challenge.
Oh, I'm sure. And everything you say just makes so much sense to me now. Probably if we had this podcast a couple of years ago, I wouldn't understand everything you say. But that's just because we are partnering with many different companies, not just brokers, but funded platforms as well, prop firms. We try to avoid as much as possible nowadays. Even there is a huge demand, but most of them turn out to be scam. And I completely agree with you that this is a normal and natural process the whole industry should go through, because there were just so many brokers popping up every day. I have a friend who is running one of the biggest websites about brokers reviews, and just he said, I cannot catch up even writing blog posts. I hire people daily because there's just so many brokers coming in. And especially with AI, it's easier than ever to launch a new website, a new platform, a new EA development company, if you wish. It's so easy. It's so easy. And the population of traders, obviously, it's not increasing that drastically. So, most of them should be sent to the bin at the end of the day. And the ones that, as you say, the big guys with a lot of money will stay for longer. But new companies like TabTrade, startups that are catching the trends and using the new technology for sure will will stand out. And can you walk us through the first 6 months of launching a new broker? What did nobody tell you about starting a brokerage, or something that you've missed through working for the other brokers? What were the challenges?
Look, it's largely the same experience. Pepperstone already had the ASIC license when I came on board, and the client base was only just starting to grow. BlackBull was fully unregulated when I came on board, and we were still acquiring clients. The biggest difference between then and now, I would say, is twofold. And there's a lot of nuances to it. But first of all, the costs involved with starting a new broker. There has been a significant increase in the barrier to entry for a new broker. Now, things like licensing fees for trading platforms, setup costs with payment service providers, legal fees for incorporation in various locations around the world. These things all have a premium on them in this space because, as you said, there are a lot of new brokers coming to market, and the service providers know this. So the cost was probably the biggest surprise.
Right.
And there's a couple of decisions that we made early on about how we wanted to build the business with that in mind. And we've always taken a really conservative approach with developing the business and rolling things out. I think the best example of that is we haven't started advertising yet. I mean, we don't have any paid advertisements that we're running. And that's because we don't feel like we're ready. We want to get our product offering 100% complete. We want to make sure that our clients have a seamless experience with onboarding, all of our systems, the sign up, email verifications, ID verification, reviewing and agreeing to legal documentation, AML, KYC checks, which we need to do for all of our clients, deposits, withdrawals. The list goes on. There's a lot of different steps. And there's so many potential pitfalls when onboarding a client. So we've been really pragmatic about it, and we've focused intently on making our user experience as good as it can possibly be. So we built our system from the ground up, and we've done that for a few reasons. First of all, security, privacy. And we want to make sure that we have control of our systems to be able to quickly change things based on trends, new product development in the industry, changing consumer demands. And I feel like we've achieved that. It's taken longer than expected, and good things always take time. But we knew that coming in. And that decision was made early on. I think the biggest challenge is actually trust. And this has been a really difficult one. And I've spoken with a lot of other people that have started a new Forex broker this year, last year, or over the past couple of years. And the same feedback I hear from everyone. It's really difficult to gain trust with the clients. And unfortunately, it's the same case with brokers that are fully regulated in jurisdictions that have a good reputation. Because it's a new company, we have to work extra hard to get the trust from our clients. So I've been a face of the business, and I think this speaks to my general philosophy about growing businesses, trying to be as transparent as possible about how the business is run, who's behind the business, and what we're trying to achieve. We tried to make things as simple as possible, and we've tried to be as transparent as possible. But the trust is going to be a challenge for the foreseeable future.
I hear you completely on what you're saying, and it's very similar with us as well, because we're quite often having this conversation with my team. We were taking a decision whether we need an office not just for us to work together, but where our clients can come in, we can invite subscribers, vendors, people from the brokers industry like you, so we can show a little bit more of what we're doing. And I said to my team, you know what, we are transparent enough with everything we're doing, so that's 100% the number one thing to gain trust, in my opinion. When you're transparent, when you show the pros and cons always, no matter if we are reviewing EA or we are reviewing a broker or we are just showing our trading. Nowadays, people recognize the real trading and the real conditions much easier compared to the good old days when everyone was scammed easily. And unfortunately, a lot of people are still being scammed, which is something that will last probably forever, unfortunately. And this brings us to the next section where I really wanted to talk about the regulation. I know that TabTrade is regulated now in FSC in Mauritius. So can you explain with simple words to our listeners and those who watch the podcast, what is actually the regulation, what it means?
That's a very good question. So, look, I think there's a little bit of history that is required for context. So the industry has changed a lot over the past decade. When we were growing Pepperstone, ASIC was on the pedestal. It was the license to have. FCA was the license to have. SciSec was an up-and-coming one, but it wasn't really the top of anyone's lists.
And ASIC is Australia, to make it simple for the listeners. FCA is England, UK?
Yes.
Okay. And SciSec is Cyprus?
Yes. So, First of all, when we got the FCA license with Pepperstone, UK was still part of the European Union. And then Brexit happened, and that changed everything. And suddenly all of the brokers that had an FCA license needed to look for an alternative. And that's when the Cyprus industry really started to take off, because it was slightly more relaxed and you were able to passport your license to other European Union countries. And it was really unfortunate for us at the time, because the setup process for a new license at that level can take a long time. Even if you're acquiring a business that already has a license, there's still a lengthy due diligence process involved with getting it operational. There were leverage restriction changes that were implemented to provide additional protections for retail traders. And that's when the market started looking elsewhere. Traders started looking elsewhere. They went to offshore brokers. It started to become a little bit more normalized. And I would say ASIC became an even more appealing option. 2017, the product intervention order in Australia happened. There were leverage restriction changes that followed the FCA, and a lot of restrictions put in place around how brokers could promote themselves, advertising and promotions, and things like this to really tighten up the industry. And it was actually spurred by something completely unrelated to foreign exchange trading. But the impact was that all these brokers, same as in the UK, all these brokers that had an ASIC license suddenly started looking for alternatives for their offshore clients. It was at that time that the FMA in New Zealand became a really appealing option, because in a lot of regards, the New Zealand market is very similar to the Australian market, but the regulator maintained a 500 to 1 leverage, and we're a little bit more relaxed with advertising conditions for brokers. Offshore licenses really started to gain traction at that point in time, and there became a general movement in the industry for the large brokers who had licenses with these tier 1 regulators to obtain additional licenses to house all of their overseas clients. Places like Bahamas, Seychelles, Mauritius. SciSec was already doing really well. They became really, really popular. And for most traders, to be honest, there's not that much of a difference. At a surface level, the user experience is relatively similar between a well-run broker in somewhere like Mauritius, and I would even go so far as to say a well-run broker in Mauritius could offer a better user experience for their clients than a poorly run one in a place like Australia. The conditions are similar in a lot of regards. So the execution time, the trading platform that's available, leverage is something that is different. Advertising restrictions are things that are different. But a lot of brokers will follow standard procedures for AML and KYC, because that's not coming just from the regulator. It's also coming from payment services, banking institutions, and credit facilities that do need to ensure that funds are handled appropriately.
Okay.
So those conditions are still quite strong in places like Mauritius and Seychelles.
Okay, let me see if I got everything right. So the big regulators like ASIC, FCA in the UK, which after Brexit is not related to Europe anymore. Like, so the brokers that had FCA, it's just for UK now, and they had to go to CISEC for Europe. And all of these, let's call them stronger regulations, probably more expensive regulations for the brokers, they actually do not guarantee better trading conditions. Is that correct? They just restrict the broker in terms of leverage, in terms of promotion, how they can promote themselves. But trading conditions at the end of the day stay entirely up to the broker, or is it still related with the regulator?
So I would say that there's two big differences. You touched on one of them. The costs involved with setting up and running a brokerage with a Tier 1 license are significantly higher. Things are generally slower because they require more compliance. There's additional sign-offs. There's additional monitoring for trades and disputes, and there's a longer list of required roles that the business needs to fill to maintain their license obligations. For the clients, they don't see any of those things. So unless something goes wrong, a lot of the experience is going to be similar. It's when something does go wrong that you notice the difference. I'll take Australia as an example. So the regulator has a very clear dispute resolution framework, which they employ when there is a problem. Both internal and external brokers are required to follow specific procedures. And the consumer protections, the regulation around how the funds are held and managed are just generally more robust in a place like Australia. So if something does go wrong, you know that it's going to be dealt with by the book. There's a specific procedure for it.
And when you say something goes wrong, do you mean that if the broker goes down? Or if the client wants to withdraw money, but there is an issue and he can't withdraw money? Yeah,
it could be any number of things. So insolvency is, there's protections in place for that. And the insurance and the indemnity that's required to run a brokerage, those things are similar between the different regulators. But when there's a dispute, so typically involving something about a trade being executed. Maybe the pricing doesn't match what was expected on the market. Maybe something happens with a transaction, depositing or withdrawing funds. Some fees are charged that a client didn't know about. There's any number of things. Or if there's just a general grievance that a client has with their account management, then this is when the dispute resolution framework would be used. Internally is typically where it starts, and then if the remedy is not satisfied, the client can seek an external dispute resolution service, usually through an ombudsman. Mauritius has an ombudsman as well, and these processes do exist, but Australia, UK, places like this, on a global scale, they're generally considered safer places to do business.
Okay, I remember this was one of probably the biggest scam I've noticed around the prop firm industry when people got scammed, and there were actually companies offering the service that they will give their money back, that they will resolve for them, and then you had to pay, and then they scam you again. So people should be really, really, really cautious about it. Even in our Discord, you can't imagine in a company like ours, which is absolutely away from the business of brokers and props, and we're just YouTubing our algo trading. Last week we got this 1-star review on Trustpilot, and the person said that I scammed him together with a company that I haven't heard of. I think it was another prop thing. So someone pretended to be me. They contacted him, and I asked him to deposit in this prop firm. He lost like 76K or something, and he left a bad review for me because he was thinking it's me. And now, you know, there will be another guy who show, hey, I'm actually Petko, pay me and I will recover your thing. So people should be so careful of that. And that's probably one of the reasons that we want entirely to switch to only live trading with brokers. And that was probably the reason I invited you for the podcast, because I really wanted to learn more about how you see, you know, the whole thing from the other side. What's important for the traders to understand when they're choosing a broker. So can you tell us how important it is actually for the client to pick the right broker, and how they will know if it's the right broker? What's the simple one thing people should look at?
Yeah, okay. I think it's a very interesting question, and there are a few different ways to look at it. But if you ask any trader what they're looking for when they're trying to find a broker, a lot of them will say the same thing. So they're looking for someone that they can communicate with, ideally a point of contact. They want to be able to fund using their payment method. They want to make sure that they're able to get their money back. The regulation is very important. And you notice that's not on the top of my list. It's very important. And it is actually different depending on the market, how important it is. But I wouldn't say that it is number one on every person's list, because the scams do exist with regulated brokers as well. And I think more important than just having the audited financials and the obligations that you have to adhere to is who's actually behind the business making those decisions about how the business is run according to those guidelines. Because all the regulator is going to give you is a list of limitations about how to run your business. And you'll sit down with a lawyer, and the lawyer will go, this is our interpretation of the guidelines. And we feel like you need to do X, Y, Z, AML and KYC check before you onboard a client. You can't take clients in this region, and this region, and you need to ensure you follow these processes when you're handling client funds. Not every broker is going to interpret the legislation in the same way.
Okay.
That's just a fact of doing business. So I would say the longevity of the business is very important. Clearly being able to see who is behind the business and what their experience is very important. Also looking at what other people say about the business and the experience that they've had. So review sites, you mentioned Trustpilot. I think that's a good example. Very solid business. I think they take the validity of their system very seriously. And there's a multitude of other sources out there available as well to go and fact check and make sure that the business is legitimate and that clients have positive experiences. You can also go and check the regulatory details, the license details. Go onto the regulator's website in whatever country or jurisdiction, and you should be able to look up the business, make sure it actually exists, is physically present at the address that they have listed on their website, and that the business is still in operation. Those things are all very important.
Yeah, I completely agree with you, because I've also seen this where brokers will just put on the bottom a few regulators, but when you visit the regulator website, it's not present at all, which is just not fine. I mean, beginners shouldn't know that, and they will just fall into the trap, and it's a huge amount of people being scammed, unfortunately. That's a huge problem. We've been discussing it all the time, but usually people come to us after they were scammed. That's bad. Okay, I think it's really clear about the regulators, how they work, what the brokers are chasing. One last thing I wanted to touch there was why they are restricting so many countries. Okay, we know about the States and how things work there, but there are so many different countries around the world, and they approach us all the time just telling, hey Petko, I can't open an account here, I can't open an account there. Why that is? Why it's not fair trading access for everybody?
Yeah, and look, I think it's a valid point. What we've seen with the multi-regulatory setup that a lot of brokers follow is that they'll have a license for one jurisdiction, and then they'll have a license for most of the rest of their overseas jurisdictions. ASIC, for example, after the product intervention order, would typically be used for Australian clients only. The broker would advertise that they're ASIC regulated, and I think that's a really fantastic point of validity for the business. There's a lot that's required of an ASIC regulated broker, but most of those clients that are onboarded are not going to engage with the ASIC regulated entity. A broker would typically have another license offshore, and a client that signs up may have their account set up with one of those overseas entities. So it's quite an interesting point. And I think it's very easy to miss when you're signing up for an account, because a lot of the bigger brokers have multiple entities, they have multiple licenses, and in some cases you might have a choice, but in most cases you don't. And you won't know which one you're engaging with unless you actually read that fine print, open up the product disclosure statement or the privacy policy, and actually double check which entity you're engaging with. When we started TabTrade, we were operating out of St. Lucia, and St. Lucia is a very commercially driven region. There's a lot of flexibility with how a business can be set up and managed, but that also provides a lot of scrutiny about the legitimacy of the business. And for a lot of clients, they see a place like St. Lucia and they think, not sure if I should be putting my money there. That was a big part of the drive for us to set up the business in Mauritius. And we think that's really helped with how the company is perceived. Operationally, the business is run by multiple people that all have over a decade of experience at Tier 1 regulated brokers. Several of us are based here in Australia, and the decision-making for this sort of business is very conservative and very sound, but you don't know that unless you go and dig further than the surface level.
I see. So Mauritius is actually one step up, as far as I understand, for the broker, and as well for the people who are signing up with the broker. And when it's an offshore broker, it actually as far as I understand, it allows you to onboard more people from everywhere rather than if you're regulated with one of the big ones.
Yes and no. So a lot of the issues that you'll run into are not going to be with the regulator that you have your license with. It's still going to be with an overseas regulator. So if we suddenly decided, okay, we've got our FSC license in Mauritius and we're going to try and take some clients in XYZ country, let's just say somewhere in Europe, there are regulators in all different jurisdictions around the world. And it's not going to be Mauritius that's going to turn around and say, hey, TabTrade, you probably shouldn't take clients from there. It's going to be the local regulator because their job is to protect their consumers. So ASIC is going to protect Australian consumers. FCA is going to protect UK consumers and so on.
And at the same time, their job is to stop you. So if you want to onboard clients there, you have to pay and you have to go through everything and you have to get that regulator. Yeah, I see how it works. Can you tell us more about how it works inside the machine of the broker, the execution, the liquidity, the fair pricing? That's something we're always looking for in algo trading: faster execution, more liquidity. How do you set up this with a broker, and what it takes for the broker to offer this fair pricing to the traders?
Okay. Yeah, that's a difficult question to answer because there's a lot of commercial secrets to how a business like this is run, but I'll try and provide some insight. So I think at a high level, the broker is providing market trading services to clients, and we provide a feed of pricing for clients to be able to execute their trades. Typically, that's going through a third-party platform like MetaTrader 4, MetaTrader 5, CTrader, DXTrade, MatchTrade, and these days even charting software like TradingView is becoming extremely popular. There's a lot of alternatives for placing trades, but to actually develop that sort of infrastructure is a really big undertaking. So most brokers will start with one of the platforms that I've mentioned, and that's for the clients to be able to execute their trades. But there's a few different things that are going on behind the scenes. So the pricing is coming from somewhere. When the trades are placed, the orders are going somewhere. So liquidity providers typically aggregate price feeds from a variety of sources. Large brokers, or even TabTrade, have multiple liquidity providers that we source our pricing feeds from, and we aggregate that as well and provide to the client. That's connected directly to the trading platform where the trades are executed. What's quite common is for brokers to have some sort of risk management system sitting in between that, where we're able to monitor the trading activity and ensure that no one's taking advantage of our system, that they're not taking advantage of the market. We do have obligations to ensure that we're watching for these things. And it also allows us to warehouse our trades and manage our own exposure.
And to simplify this for the beginners, and just for me to make sure I understand it properly, TabTrade as a broker receives the pricing from the liquidity providers. Is that right? And they aggregate the pricing from a few different, I assume, what is it? Institutional banking, or who's the initial source of the pricing from where liquidity providers get it and they give it to you?
It's quite a long list, actually, but large institutional sources. So large institutional sources. Big banks that based globally.
Okay. And then they give it to the liquidity providers. Liquidity providers give it to the broker, in this case, TabTrade. And you say when people click and they sell or they buy, this order gets where?
So the order will go through our risk management platform, where we're able to make sure that the pricing is, that's where we manage our pricing, because we're able to mark up trades, mark down trades, there are times where there's high volatility or low volatility in the market, and that does have an impact on liquidity. So for a broker that wants to provide a consistent service, we do need to make sure that we're actively monitoring the market and managing that pricing feed for the clients. Those orders then get routed through to our liquidity provider, who takes it to market.
And I really want to know as well from what the execution speed matters, because with us, with algo trading, with some of those scalping robots that execute trades for 1-2 seconds, we found out recently that it's very important to get a VPS with a location very close to the server of the brokers, so we get like below or a little bit above 1 millisecond, and trades get executed very fast. But from the inside, from the brokers, what is the thing that executes the trade so fast? Is it the internal system the broker having? Is it the MetaTrader platform? What it is?
Yeah, so this is where it becomes really geeky. Actually, there's a few different things that are important here. So you mentioned the VPN, and we use NYC servers, and that it does ensure that the trades have low latency, and that's very important. So having that at a hub like Equinix to be able to ensure that trades are passing through as quickly as possible is very important. Pricing is going to vary between broker because everyone's using different liquidity providers, and the infrastructure to connect all of the different parts of their system together is going to be different from broker to broker. So there's pros and cons to having a quick execution speed for a broker. If you have very, very fast execution speed, then you're definitely going to avoid some of the expert advisors that have their own pricing feed that may or may not have quicker pricing than you. And if they have quicker pricing, then they know what's going to happen on the market before it happens on your system. So having quick execution is very important for a broker. For TabTrade, we've maintained an execution speed sub 30 milliseconds on average over a month. So we track that. And look, I think for all of the different key metrics for a broker, it's very important to look at what those averages are, because a lot of brokers will say, okay, they've got execution speed from 1 millisecond. That's great. It might be 1 millisecond at different times of the day under different market conditions. And that might not necessarily be when a client is placing their trades. But when you look at the average over a period of time, then you have a certain standard that you can expect.
Okay.
So the quick execution speed is very important, and a lot of brokers do make it a priority to make sure that they're executing their trades as quickly as possible. For TabTrade, we've been focusing on our value proposition on spreads, and we've tried to make those spreads as competitive as possible. And it's the same sort of thing to execution speed. We have looked at an average over an extended period of time. So our focus is on majors during market sessions, and we're maintaining an average close to 0.0. It's pretty close to as competitive as it gets on the market. And that does require us to sometimes offer pricing at a point where it actually costs us for people to trade rather than us clipping the ticket on people's trades, which is how a typical spread markup or commission model would work at most brokers.
Okay, yeah, that makes sense. And where is your server if people want to trade scalpers on TabTrade? Where they should be looking to locate their VPSs?
Yeah, well, we're actually going through a bit of a transition at the moment, but with New York City servers based in New York, and we're also setting up on LD5 as well in London.
Okay, London and New York. And you've touched spreads, commissions, the costs that traders are paying when they are trading. Can you explain with simple words what the broker earns money from, what the broker benefits?
It's really quite simple at the end of the day. Most brokers in the industry will offer a 2-account model. One account will be what's generally referred to as a standard account. The standard account is no commission, and there will be a spread markup on the trades. And that's similar to any currency exchange. I mean, if you're going on holidays and you're changing cash at the airport, the buy and sell is typically going to be at a different price. That difference is the spread. The same thing with the buy and sell on our trade platform. There is a difference between the buy and sell price, and that's the spread. Standard accounts typically operate somewhere in the ballpark of 10 points markup or one pip markup. Then there is a more advanced account, and it's fantastic option for people who know what they're doing, people who have been trading for a little while, and maybe they're doing high frequency trading, they're quickly in and out, or they're running an algo or an EA. And that account is on a commission basis. So there's typically no spread markup on that account. It will be near zero. And when you hear a lot of brokers advertise that they have 0.0 or from 0.0 spreads, as a lot of brokers say, that's the account that they're referring to. They're talking about their advanced account, Edge, Raw. There's a lot of different names for it, zero in some cases. So that account is going to be a volume-based commission, and it will be somewhere between $5 and $10 a lot round turn that you're being charged. Most traders are going to come in and place smaller positions, so they'll pay a fraction of that cost per trade. And once they actually get to a full lot worth of trades, then it will have worked out to be approximately what is advertised on their site, depending on which currency pairs or commodity you're trading.
So can we say that standard account is more suitable for beginner traders or for traders who are not trading actively, but those that are using EAs and they are, let's say, trading professionally, executing more trades, it is better to take this more advanced RAW, ECN, or whatever it's called with the broker, the second type, which is based on commissions?
Yes, I think that's a really good way to look at it. The standard account is just nice and simple. It's easy to understand. There's no commission that you're being charged. There's just a slight markup in the spread between the buy and sell. And if you're intending on holding positions for a long time, you're just testing things out, or you want to see what the broker's executional system's like, that's fantastic.
And for the algo traders, because that's our audience listening today, can you explain what or how they should be comparing brokers, what they should be looking at? Because what we've been doing recently, and I recorded a video just a couple of days ago where I showed the same EA on multiple brokers, and now one of them was better. 3 months ago, it wasn't the case, and I said to my team just yesterday in the team meeting that probably we will never find one that will be, the best for gold. It will remain the best executional, the best broker that executes gold rapidly for scalpers, because from everything you're sharing today, that especially that the brokers are having different liquidity providers every day, things are changing. Maybe we will have to always trade with a couple of brokers, trusted ones, and we will never find one that is executing trades in the best way. What's the thing algo traders, or how they should compare brokers in the simplest way?
Yeah, it's a surprisingly difficult question to answer, to be honest, because there are so many variables that impact this. each broker, well, just like there's different tiers of regulation, there's different tiers of every different service provider that a broker will tap into to operate their platform. Liquidity is no different. So there's typical tiers or categories that liquidity providers fall into, because they're aggregating different sources that they're passing on for their pricing to the broker. And as you go from broker to broker, you see all of these differences, because on the back end, there's a lot of differences as well. So you really don't know until you actually open an account and you test it out, and you can literally put them side by side on your computer or jump between accounts on your phone and just check what the difference is with the pricing. Now, there are a variety of services out there that do measure execution speed. They do measure spreads. They do track commissions and other fees. I think there's a lot of really good resources that are available, unless they're automated with a direct connection to the platform. Then you do need to ensure that they're properly up to date. I think one really great example, which is more so available on the broker side, just for competitor analysis, is Datalist. And Datalist is a platform that does actually connect straight into the brokers and does track all of these metrics with raw tick data. Historically, you can go and check at any one point in time what pricing was available for a specific asset on a specific account at a specific broker. And that level of transparency is incredible. If you're trading with a broker that doesn't have that sort of connection available to provide that level of information to you, you need to be asking questions. And if you're not able to see what those averages are over time, you need to be asking questions. But I would say, if you just want to quickly check, go and open a demo account. Most brokers have demo accounts that are available without any cost, and you can just see for yourself what the pricing is, what the execution quality is like.
Okay, all right. Thank you for that. That was interesting for me to learn. And one last topic I want to cover today. TabTrade is relatively young brand. How do you convince the skeptical traders to go with a broker that just launched? For me, just an email was enough, because I know you for years, and I was like, oh sure, I will open an account 2, 3, 4 if we are happy with the conditions. Obviously we will use them. We will use the brand TabTrade. But how do you convince the skeptical guys that are having an account with one of the big brokers? How do you convince them to open an account with TabTrade?
Yeah, it's not easy. So with a lot of difficulty, to be honest. So look, our competitive advantage is our spreads. We've tried to make our trading conditions as good as possible. And there's a lot of different aspects to it, as we've covered. But for TabTrade, we're focusing on that one thing and trying to be the best at it. And I think in any marketplace with any product, if you just focus your attention on one aspect of whatever product or service you're providing and you become the best at it, that's how you penetrate into a market. So that's the strategy that we've taken. Now, as a smaller broker with less content, less tenure in the market, and still a growing reputation, it's going to be hard no matter what. So for us, over the past couple of months, our main focus has just been on building out our user experience and our product offering as best as we can. So we haven't been actively prospecting clients. The industry has also changed quite a lot over the past couple of years. And there's now middlemen for client referrals. And those sorts of things just didn't exist 5-10 years ago, even 5 years ago. So forming good relationships with business development managers for different regions, different master IBs who have their own network of introducing brokers, who have their own portfolio of clients, is incredibly important for continuing to generate new business. And that's been the focus for us, just trying to form good relationships with people in different markets to slowly gain traction. And we're not trying to be number one in the marketplace. There's a lot of options available for clients, but once people come and open an account with us, we hope that they'll see what the difference is and how well our platform functions, the tools and support that we have, all of the different features, relatively rounded out product offering, and I would say a personal experience. I'm actively on the phone with clients, with our referral partners, and I think at most brokers, you're not going to get that.
Absolutely. I think you will do a fantastic job. Simply, not just because of your experience you had with Pepperstone, with BlackBull. Of course, that's super important, because if just let's say businessman wants to start a broker and he doesn't have any experience, he will just start hiring random people. But when you've been through all of that, you know exactly what to improve. You know how to, first you know how to do it, but then you know what to improve and how to do it even better. And when you asked me for my feedback when I was opening my live account, if you remember, I just said it was just perfect. It was a great user experience, which is noticeable that someone with experience did it. And it's not only that, it's I believe nowadays this skill of recognizing not just the potential, but to recognize what the people are looking for is very important. And it's something we were discussing the other day with one of my team members who is also from Australia, Sam, is that people use so much AI nowadays, and many HRs or people who are hiring people say, you know, if you don't know how to use AI, we don't need you, or, you know, everybody should use AI in the companies. But it's one thing to use AI, and it's another thing to have the experience and to use the AI or all of the technology. It just makes so much difference, because my team members now use the AI with all of their experience, and we are 10, but it feels like we're 50, because everybody, you know, uses AI in the best possible way, and we're just so productive. And I'm pretty sure it's the very same thing on your side. And I think you're doing great, because you're a very skilled person, not just with, like what I said, with the experience you have from the brokers, but the person you are. You've been always very kind to me since I know you in BlackBull, and I see the same person, and I think this is what will bring trust at the end. And you said, we don't want to be the best. We really don't have to be, and that's also something I keep repeating. My team is that they say, you know, Petko, we are not scaling to million subscribers or something. I said we don't need to. We better have a few that are with us, that are supporting, that are trading, that are giving us the feedback. That's more valuable in my opinion. It's not the number anymore. Even YouTube doesn't look at, you know, the YouTube algorithm ranking. When it ranks a video, it doesn't look at the count of subscribers you have. A brand new channel can do as good as an old channel if the content is good. So I believe this applies to everything. A brand new broker can do as good as a big broker if they have a good product. So congratulations on everything you've done. It's amazing. I was very pleased when you sent me the first email that you have a new brand. I'm all in. I will deposit more, and I will test more EAs. We will show TabTrade, because I know you, I trust you, and that's what matters for me.
Thanks, Petko. I really appreciate your opinion on it, and look forward to having you as a client. If you have any issues, give me a call directly.
Okay. I'll make sure to do that. And I hope it's not going to be our last podcast. It was super interesting for me. And hopefully next one we can do it live. I can visit Australia. I've been promising Sam to do that for a long time now. But I'll be very happy to have another podcast after some time again to talk about brokers.
Yeah, that sounds amazing. I look forward to hosting you on this side of the world.
Thank you very much, Ben. All the best. Good luck with the new brand and keep in touch.
Thank you.
Thank you. Good luck. Bye-bye.